Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Day, the daily stock market analysis show where we look at technical charts and try to understand what happened in the markets during the day and then plan for a better trading day for the upcoming day. It's December 29, tomorrow, Friday, 2023, the last trading day for the year 2023. Kind of day we had. There is a non-stop rally that continues and new all-time highs got made on both the indices and looks like it is heading towards 22,000. Can you believe that? From 20,000 to 22,000 with three breakouts within a month. That's what we're seeing. Right? Markets are on steroids, no doubt about that. Let's first look at the charts directly and then come back to the wrap-up. As we know, we'll see the basic candlesticks first. Here we go. We have another gap up and we have a green candle with a new all-time high on the Nifty, and on the Banknifty also we have a new all-time high, but it's an industry doji, and both of that is happening at the top of the trend line channel, and it also is broken out of the 78.6 Fibonacci retrace extension levels from the previous swing low, and both indices have that right stop on the channel. It's a consolidation that has happened for several weeks, just broken out. It's a third consolidation breakout in this month itself, and that's where we are. Nifty also the same. So we are at the very top. Just study the resistance and support levels quickly. So the first would be to all-time high, 21,800. That level has to be conquered. Then 21,900 and 22K. That's for the next tomorrow. Those are the levels. Uncharted territories, you can say, was succeeded the Fibonacci extension levels also, and then it could be breaking out of the trend line channel also. Downside supports could come in at 21,500. Number and the Fibonacci 78 extension levels. There's a gap that's coming in at 21,500 nearby zone, so that together with that 21,700, yes, 21,700 also could be support. 21,500 is gap support. Then you have 21,000 big support, which is a confluence of 23 Fibonacci extension, Fibonacci retracement, 61.8 Fibonacci extension, and a 20 exponential moving average nearby. 21,000 is the best support you can get if at all retracement happens. First, there's a gap also coming at 21,700 after that if that breached. That support resistance on the Nifty and Banknifty. If you see, you can see that it's also a third consolidation record that's happening this week, and it's all-time high of 48,600. Would maintaining 650, 48,650 would be the first task. That's resistance, and then it could be next would be 48,700, 800, 900, and 49K would be the real resistance. That's going to be because it's a big rounding number. Downside supports could come in at 48,000, which is a very good support, rounding number. And after that, 47,000 is the best support. It's a Fibonacci 61.8 extension level and 23.6 retracement level, and also a 20 exponential moving average. 47,000 is the worst that can happen if a breakout happens tomorrow or day after. Right, so that's a support resistance level from the bank. Just quickly wrap this. So today it's a half a percent dip plus 124.57 Nifty, closing about 21,750 with 29% rally. Last one's rally itself is 15.5 plus, and 26% rally, 48,000, 15.5% loss rally, 226% today around near to half a percent, 0.47% bullish candle. So the only difference is that there is interest in the bank Nifty as to whether to move up or not, but Nifty seems to be not caring about anything and then moving like a rocket, right? With hardly 3% of small retracement came in between. Others it was all mostly consolidating and then breaking out, consolidating, breaking out. Small retracement of 3%. That's all. Intraday it was range bound after the up move. It was range bound. It was not ready to move up that much. Neither was it ready to move down that much. Range bound within a range. FIs was buying surprisingly during the holidays yesterday. 3,000 crores of buying, big buying in the cash market coming yesterday. Today, data is not out, but hopefully FIs made a bought today also, which is quite surprising because this is the time when people expect less volumes and holidays and lousy market, but that's a time when the FIs are buying. It's surprisingly new thing that's happening. If you look at the historic data, so December and this December, especially the end of the December when the market is supposed to be lousy like anything, that's where multiple breakouts are happening, and you believe that. So if as a back to buying, it's great news for the market. Just support levels are not repeating. I've already seen that short-term momentum is bullish, no doubt about that. Trend ADX also bullish. RSI is what short momentum is there. Short-term is daily charts. Index finally cool off a little bit, 2.2%, but now good because it's 50% plus up move that has happened in the last 5 months. Around 15.14 it is. We are at 10.2 kind of 3 kind of levels. It's a 50% move from that. 15 plus. So gotta be cautious slightly. Market is moving up in all-time highs, and that's why the fear is there, right? But market when moves up, it is supposed to have cooled off at least to the 12 or 10, 12 or 11 kind of levels. But it's rising up means there is something the market fears. Correction may be due. You have to take care of that. Right? Bollinger Bands is expanding, but Banknifty is contracting. So Banknifty is slightly weaker in the Bollinger Bands as well as today's price action of the Doji. Making all of that. 49K is not too far. Only 500 points, nothing for Banknifty, but yeah, there is indecisiveness and there is a band expansion that is yet not happened. Unlike Nifty, where both are expanding on the upside, band is expanding on the upside, price is like non-stop rally. So as I said earlier, it's market super bullish. There's hardly any correction after the vertical moves of 2,000 points nearby, just in 3 breakouts in a single month. Because the monthly if you look at the monthly capital, it is the biggest monthly capital that you have seen any time recently, right? So it's on steroids, super bullish, but be cautious. VIX is rising up. Vertical moves has to have corrections. It can come anytime when we least expect. Today, all the sectors are green. Our major industry sectors like realty, pharma, auto, FMCG, metal, IT, all are green, and all of them are in bullish. All made 1% moves. So across sector industry, not a single sector is bad. All sectors moved up is very rarely seen, and that too, all sectors made 1% moves very rare. Everywhere except let's say all are in bullish momentum. And today all close green. So everything green today across the sector, across the heavyweights. Right? Momentum also bullish almost all. Use indices at the top, breaking out just like ours. All-time highs nearby. All major indices of Dow Jones, S&P 500, Nasdaq, all are green and on the top. The oil is falling. Rupees gained a little bit, but still remained weak at the 83 kind of levels. Crude oil showing some more red after the spike that happened at the bottom. Gold is consolidating at the top after making the recent all-time high. So all good looking at the global cues and global commodities and all that. Right? I think seriously wrong. So this time for not the time for buying investing, of course. Wait for the tip for buying, but momentum investing it may still work out on selective stocks. As a trader, the direction is very clear. As an investor, you know the market is breaking out. You may have to book some profits or do some momentum trade and wait for the tips for the buying and SIP more quality stocks. But trader, the direction is very clear, but you have to be extremely cautious because vertical moves rarely happens forever. Markets corrections are due, it can come anytime. So be cautious about that, but go for directional strategies and not non-direction. Non-direction is even if you play splits or any completely hedge strategies, it's very difficult. The market is heavily bullish or heavily bearish. Either way, both are. If it is medium bullish, moderate bullish, all is fine. But it's extremely bullish, then it's very difficult. It's not worth the effort of adjusting and moving along on that. Rather go for directional spreads and you can make gain. Don't forget on at risk, hedging positions, VIX is rising up, pushes cut short positions as if it hits 20. That's all. Manage your risk and play it safe. And that's all I have. Fellow subscribe, please subscribe and share to your friends and colleagues. And that reaches out. Thank you. Happy trading, happy learning, happy investing. Bye bye.